PayPal just released their latest quarterly figures, a beat across the board. At the time of making this video, stock is up between 6 to 7% or so. Of course, that might change after the earnings call and when the market is open. Now, currently, the company had a market cap of $61 billion or so. Remember that because they're now expecting to buy back shares $6 billion worth. $6 billion, that means 10% or close to 10% of the whole company. They've been buying back shares aggressively over the last couple of years as well. So as long as the company remains fundamentally undervalued, but the business is doing better and better and better, generating more and more free cash flow, buying back more and more shares, your shares, of course, you want your shares to go up, right? You don't want your shares to stick at around $60 forever and ever. But eventually the market will notice that there is a very good business here, that there is a business that is growing, not staying at 0% growth, and becoming more and more profitable. So for me, right now, ideal scenario, accumulating more and more shares, the company buying back more and more shares as well, which will mean that my shares in the future, when the stock market will suddenly realize that, oh, there actually is a pretty good company behind this stock, my shares will be worth much more. When will that happen? Maybe it happens right now after this earnings report and earnings call, maybe not. But for me, I have time. If I can continue to accumulate more and more shares of PayPal and the company, the business shows me more and more improvements each and every quarter, that's fine by me because eventually the market always realizes that, oh, there is quite a good company behind this broken stock. Same with SoFi, although PayPal is is much more profitable today than SoFi is. SoFi's video, by the way, earnings report is out already on the channel. That will be in the top right corner. Now, before jumping into the rest of the video, if you enjoy this type of videos and want to support me even further, like, subscribe, hit the notification bell on. We're on our way to reach 50,000 subscribers. Thank you very much for all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment. Get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off with a comment here from Alex Chris, President and CEO. PayPal delivered a strong second quarter and first half, and I'm confident we're on the right track. We delivered our best transaction margin dollar growth since 2021, and we are making steady progress in our strategic transformation while investing in innovation and operating more efficiently. Given the strength of our business, we are raising our 2024 guidance and increasing share repurchases. We are operating from a position of strength, delivering for our customers and focusing on long-term profitable growth. Chef's kiss. So for the quarter, this is basically the snapshot. This is a great summary by Brad Freeman on X. I highly suggest you go follow him there. So TPV, $416.8 billion, up 11% year over year. There was a slight miss by 0.7%. Sales guide beat sales estimate by 0.8%. GAAP EPS beat by 22 cents, beat guide by 20 cents. They also beat EBIT estimate by 6%. For the annual guide, about the same. It says here Q3 was about in line on revenue and ahead of EPS, but all the rest was raised buyback guide as well from 5 billion to 6 billion. So overall, good quarter, good guidance as well. Now let's dive a little bit deeper. So transaction margin dollar, we can see here year-over-year growth 8%. We know from previous earnings call that they were expecting transaction margin dollar to be positive for the full year. So that's great to see already some improvements right now. Transaction margin still down year over year, 19 basis points year over year, but improvements already now quarter over quarter. Very, very nice to see. With regards to total take rate and transaction take rate, still expected to be down, and that's exactly what has happened. Down quarter over quarter and of course year over year, although a bit less damage quarter over quarter than previously. They say here transaction take rate is down 3 basis points compared to a 5 basis point decline in Q1, benefiting from PSP volumes and Venmo offset by branded checkout, volume and merchant mix shift, FX fees and other merchants services. Eventually, this will bottom out just like transaction margins has bottomed out and just like active accounts growth has bottomed out as well. Yes, it's true that we're still down year over year, but quarter over quarter, it's now 2 quarters in a row where we are seeing active accounts growth. And I do believe that there will come a point, maybe already next quarter, where we are going to see year over year improvements. But overall, what you want to see is this number of payment transactions, transactions per active accounts increase. So year-over-year growth here, 11% year-over-year growth quarter-over-quarter as well. So that's nice to see. Number of payment transactions growing 8% year-over-year, growing a little bit quarter-over-quarter. So yes, of course, the headline numbers was previously, oh, active accounts are coming down, nobody's using PayPal anymore, companies dying, etc., etc. Well, no, the company just went after quality instead of quantity. And now they can actually do both. If we look at free cash flow and capital allocation, so free cash flow increased, well, year over year, it increased quite a lot since the same quarter last year that was negative, but that came in closer to $1.4 billion. Adjusted free cash flow year over year increase of 31%, $1.14 billion. And so if we look at the payment platforms or the TPV mix across PayPal's payment platforms, branded checkout for the current quarter, 6% FX neutral growth, 27% of the total. PSP unbranded, that's 37% of the total and a 19% growth. So of course, decelerating here a little bit, but overall stays the same. Venmo, now 18% of the overall, growing 8% year over year. P2P ex Venmo, also about the same, 4% growth, 8% of the total. They also say here that consistent with price to value strategy, PSP TPV decelerated from Q1 while Braintree contribution to transaction margin dollars growth improved. Venmo TPV growing consistently with 5% growth in monthly active accounts, continuing P2P ex Venmo TPV growth benefiting from increased engagement among existing user base. Now, with regards to Venmo, this is something that I would love to hear more about in the earnings call, so definitely stay tuned for the second part of the earnings recap. And so overall, this is what you got for the quarter. Of course, total revenue, you would maybe have expected or you would love to see double digits, right? 10%, 11% growth year over year. But overall, nice to see that the large parts of the business are doing better, more profitable as well. So transaction revenue up 9% year over year, primarily driven by Braintree, branded checkout, and Venmo. Flat other value-added services revenue with higher interest income offset by lower credit revenue. Transaction margin dollars, as we've seen, improving nicely and returned $1.5 billion via share repurchases, 110% of free cash flow, $5 billion on a trailing 12 months basis, and they're reducing weighted average shares by 6%. Now, looking at guidance for Q3, mid-single digit growth, non-GAAP EPS, high single-digit growth, so GAAP EPS approximately 96 to 98 cents. For the full year 2024, now transaction margin dollars, the prior guidance was slightly positive, now low to mid-single-digit growth, so that's great. Non-GAAP EPS, low to mid-teens growth, prior mid to high single-digit growth. GAAP EPS, approximately $3.88 to $3.98, previously $3.65. Free cash flow, approximately $6 billion, prior approximately $5 billion, and so share repurchases of $6 billion, an increase of $1 billion from the previous guide. And so right now, if we look at the stock, we got that nice little jump here. We will be sitting above the 200-day moving average so far. Maybe that might change during the day, but we are making our way above that 200-day moving average. That sits at $62.74. Remember, last time they reported earnings, the stock went above $70. So let's see what happens this time if the market will just take away all the gains again. I don't know. I mean, the business continues to execute. Management is showing investors and the stock market that, look, our plan is working. We are growing still. We are becoming more profitable. We are buying back shares. If you do not respect our company, we will just buy all the shares throughout the years. So me as a shareholder, I'm still bullish on PayPal. I think yet again, a good quarter. Execution here is key. Alex, Chris, and the new team, they're doing everything that they should be doing. Yes, maybe we would have loved to see the stock at $100 already, right? But don't forget, when sentiment changes, things can move extremely quickly, right? V-shaped recoveries, we've seen that with plenty of other companies as well. This one is just taking a little bit longer. Still a long, long way to go, but so far, if they can keep on buying each and every year $5-6 billion of their own shares, and the market cap of the company doesn't really increase that much, okay, eventually I'll still be a winner. So that's about it for this video. Of course, second part will focus more on the comments on the earnings call. We'll go watch the SoFi video as well. It's already live on the channel. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.